All right, so we got the first big report out today or last night with Microsoft, and that was a big mover, both to the upside initially and then to the downside for most of the night into this morning. And then the market pivoted and it had a pretty decent rally to the upside from low to high, a pretty decent move to the upside today. So I'm going to break that down in terms of how bullish it was, and is this was that the kind of move we need to see to solidify the trend change and keep this intermediate run going into a market sentiment run. So we're going to break all the technicals down. What are some of the bullish indicators that we're really liking right now? What are some of the bullish indicators we really need to be seeing? So we're going to look at that to see whether and weigh just how bullish we are and what our expectations are as we have Tesla earnings coming out after hours. We have more GDP and PCE and FOMC next week, all the rest of the FANG stocks next week. And there's a lot on the plate over the next week or so. So we'll take a look at how the charts are setting up going into that. Take a look at what's moving the price. There's an interesting move today in different asset classes. Again, Bitcoin has been on a tear. Long-term bonds had an interesting move here, up and down. Yield as a result as well. And then the dollar has been a big influencer of a lot of this risk appetite and what's it doing, and is there any reversal in the cards there? So we're going to talk about that, our trade ideas and a stock in the healthcare area that appears to have at least ended its bearish trend. We'll talk about how to trade something that may be starting to the upside. So let's go ahead and get started. Today is Wednesday, January the 25th, 2023. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, before we get going too far, I invite you to subscribe to our YouTube channel with this icon here or the red subscribe button down below. Hit the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, check out some of these other things over here on the right. Including upcoming, our recent posts. Come down to the bottom, click on that heart. It opens up this tab. Hit that like button. Same thing here. Click that thumbs up icon. It opens up this tab. Hit that like button again. The more you click on like and you retweet and share and comment, the more it helps get our content out to all of our followers on those platforms. So we really appreciate those who do that day in and day out. And if you are watching right now, you can go ahead and click on that like here while you're watching. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. You can see the big reversal we had today. It was a big reversal. We opened up down. We went down lower at the beginning of the day. It looked like we were going to have a runaway gap, which would be the beginning of a bearish intermediate run, right, when you get the runaway gaps. And then we rallied. We rallied all day long and finished at the highs of the day. Very strong close. And you can see 2 consecutive down days that were where we closed higher than the open twice. The interesting pattern. Sometimes you get those. You can see you get them at these when you're at the top. You don't get them too much throughout a bullish move, but you tend to get them. When you're peaking and you're rolling over. You can see see them here at the highs of the day. You can see another one over here. You can see one right there. Excuse me. Sorry about that. I tried to hit that mute button before I coughed into the microphone. But we did finish higher, so that's a good sign. So we finished well off the lows. So it actually brought the momentum line up despite the down day. The near-term line, however, did not stay up for very long. Remember, the near-term line can't really stay up for very long because the momentum line never got up there. We had that problem over here, and that was the peak. And we'll see. Obviously, we're in earnings season right now. You had Tesla after hours. You had IBM. You'll have Intel tomorrow. So we're in a very important earnings season. We have all the FANG stocks next week. We have GDP and PCE out this week before the end of the week. So there's a lot of things on the docket for the markets here. But it's been unable to really bust through. I mean, we've had unemployment. Really good unemployment rate, at least a dovish wage inflation portion of that. We've had inflation still continue to come down. And we had lots of good news, lots of reasons to break through this, and we haven't been able to. We're sitting at it, but we haven't been able to break through. But we are sitting at it. So, the longer we stay at an important resistance level and just keep banging away at it, you would expect that one of these days it would bust through. Either it's going to really hold and solidify as even that much of stronger resistance now once it does hold, or it's going to get worn out and we'll bust through that. Again, this is until we get a momentum spike up into the reversal zone, you would just not expect that. So in other words, we're probably going to need a really significant breakout, like something like this. You can see how the momentum line got way up there. That's the kind of move we're going to need to get. And even that one didn't work, right? We got the cluster the next day, and that one didn't break us through and keep us there, right? But that's the kind of move we're going to need to see to really solidify this. The intermediate line is rising. It is higher now than the market sentiment line. It's in bullish territory. But again, without the near-term line spending a lot of time in the reversal zone itself, it's going to be hard for the intermediate line to continue to move higher. So keep that in mind. We're also not, we're above 2.5%, but we're not like, we're barely above 2.5%. So we really need to break through. And the intermediate line's rising. So we actually have dark green shading a green line. So we're there. Like if we can really just push through with, like I say, that kind of move right there to really solidify this, that would be great. But we've gone multiple days without being able to actually get that. One breakout move we kind of got, it kind of really wasn't that bullish. It was only finished, a smidgen up above that resistance. And these are Fibonacci resistance lines, remember. They go back, to this year-to-date, and then the year-to-date, well, I guess it's not year-to-date anymore, but this current market sentiment decline off the early 2022 highs, and then, of course, the last intermediate decline that we are currently retracing. Okay, now let's take a look at the Dow Jones and some of the other indexes. First, the Dow Jones, you can see again, it's also sitting near a resistance. Remember, it actually did flip this script. Like we did break, on this retracement, we broke above the 78% line. So we actually changed the impulse moves to the upside. And that's what we've got. And we've been retracing that last bullish run. So we're actually drawing the lines in the opposite direction because we're retracing down. You notice we did get back above the 23% retracement to the point where we're not retracing anymore. We're back to being bullish. You do have this line, the 62% retracement line, that has been acting as a resistance. We've been kind of going up and down, and there's your 78. That's the ultimate break above that. Now we're not. Now we're out of the retracement of the long-term move, and we're really going to the upside here. So not quite there. You can see the intermediate line's way below market sentiment. The near-term line made it again to very high levels without the momentum line. So this is not a move you would trust, not in the least bit there. And then you look at like the NASDAQ 100. You can see it's also sitting up again against resistance levels, multiple Fibonacci resistance levels in this area. And again, you can see the near-term line going much higher than the momentum. And again, that doesn't play out well, especially when you consider we've got higher highs with lower highs in the near-term line. That's a bearish divergence that you would expect to come down to at least the low that's in between. And then obviously you would be breaking the trend if you break through that low point. And then the Russell also, really important resistance level still. Intermediate lines up. You can see the near-term line again, much higher than the momentum line. So these are not the kind of moves that you would trust when your near-term line goes further than momentum. You need a breakout, right? You need the momentum line to spike up to really help solidify the bullish move. To keep the near-term line, especially again with the near-term divergence, lower highs with slightly higher highs there. That would be a bearish divergence play. So, and especially with both peaks, your near-term line went a lot further than what the momentum line said it was expected to go. All right, now let's take a look at the weekly chart here. So we'll come over here to this chart. Again, the week's not over. We still got 2 days left. But you can kind of see, again, the bullish candle is still there. It's still intact. We're still flirting with breaking above the 40-week, 200-day, 40-week exponential moving average. Again, you can see the resistance here. You can also see, too, this isn't the first time we've closed slightly above the 40-week. And we failed miserably the last time there at the end of November. We'll see how that ends up playing out here this go-around. You can see that when you look at the 3 green arrow charts, you still have the green arrows on the S&P, on the Dow or NASDAQ, and on the Russell. You don't on the Dow, right? You saw the red arrow on the MACD. You got a green arrow on the moving average. You have a green arrow on the stochastics again. But we don't have the 3 green arrows there. So you can see again we're not getting all 4 of them. But the other 3 pretty much are in bullish trends. So you've had 3 green arrows now for quite a while. So you've pretty well established bullish intermediate, at least the beginnings of a bullish intermediate run on all of them. It's just a matter of like pushing through to keep this going. I mean, we're above the 200-day moving average here. We're above the point of control. We're above the 8 and the 17-day. We did break below the 8 and the 200-day on the lows of the day today, but we were above the the 8 and 17 have crossed above the 30. They've crossed above the 50, and now they're working their way. And the 8's already crossed above the 200. Like, we should be really bullish here. This, we have the beginnings. Like, we didn't get the. You notice that 8-day moving average hasn't crossed above the. Which has barely done it right now, right? It has not done that. It has not crossed above since March. So it's been almost a year since the 8-day has been above. And then your 17-day barely basically touched it there in March. And now you can see if it were to break through here, how bullish that would be. It'd be a really good sign. The problem is, again, it appears that the MACD histogram has peaked here, right? And so again, usually the MACD histogram peaks and the MACD peaks later. And so you've had your strong momentum, and we're not really pushing again. But we've got plenty of reason why we could push if we get the right data and the right positive news that really impact. I mean, look, you break above this volume node, there's not very much volume up here compared to what's below us. I mean, we really can take off at this point. Obviously, we'd be above the 200-day moving average. We'd be above the 50-week moving average, which is still has been above the 50. The 8 and 17 week are crossing above the 30 week. I mean, there is a lot of really good developments here. If you look at the RSI, again, we're still stuck at 60. We're still stuck at we still got the divergence pattern set up on the CCI. You look at the DMI. You are above 30 still, barely, but you're above 30 on the positive indicator. We did not drop back below 20 on the negative. So your ADX is still flat. We're not trending. When you look at the Ichimoku cloud, it says the same thing. We're not trending. We have a weak bullish trend going. We're barely above the cloud. Both of the blue and the green lines are still in the cloud. You do have a positive 26-day rate of change, which will stay positive, barring a significant breakdown here. So you have that going in your favor. And then finally your Keltner channels and your Bollinger Bands. The other factor that's really not breaking us through, and why we might need that breakout day, is to get above the upper band, right? I mean, if you get above the upper band, you get above the upper Keltner channel, then we can really get going. But here we are, again, with the green dots, and we haven't gotten above either the upper Keltner or the band, and the momentum's already relatively high compared to what we've seen without that. In fact, we're not even the upper quartile of the bandwidth, much less above the upper band. So you see how we just aren't bullish enough. Like, we've been bullish, has been great, but from a technical standpoint, we're just not bullish enough to engage a new trend and get it going to the upside. Looking at the money flow again, you look back to last time we've been at this area, and we're still not getting the matching money flow on the upside and match what we saw on the downside. And you can see the money flow index is dropping pretty sharply now, is out of bullish territory, and again, working its way back below 50 would be a bearish sign. You didn't really get a big jump either in the McClellan oscillator, which is your advancers decliners. It's not back down below 35 yet, but it is also not moving up anymore, and appears to have peaked, maybe rolling over. And again, you can see the summation index is really bullish. It's above 500. We got above 500 there as well. But you can see by the time we did get above 500, we had already peaked on the oscillator, and and we rolled down. It appears that that's the case again. So, look, there's a lot of really good things, and there's things that just aren't there. And and it's telling. Like, this is a lower close on the whole on the Hakinyashi. We're below the whole moving average still, even with the rally to the upside today. We're getting that close to flipping the parabolic SAR to the downside. The MACD again here is peaked relative to the 200-day, and the Hakinyashi differential has already dropped below its moving average. So you would expect now that this is a reversal pattern. And if we flip that parabolic SAR and we turn the hull, we could be down for a while again. So that's the kind of move we're in. As bullish as it seems, we actually are getting some signs that we may be peaking here and rolling over to the downside. Then we might have run out of gas with this current bullish momentum that we have. You remember, it is a seasonally bullish time of year for volatility, and I have to keep that in mind. And when you get these big drops and you fill in the gap, the fact that we still had the big drop is still there. The bears are here. The bulls came in and saved the day, but the bears are here. So it's, on days like this, the bears are just not there. They get overwhelmed. On a day like that, even the bears get overwhelmed. But the bears were here today. So the bears and the bulls had a fight. The bulls won at the end of the day, but it was a drag out fight, and the bears were there this time. And you'd expect that, that's, again, like I said, you get those days where you close higher than where you open at the ends of bullish moves. That again goes to show that on a lot of these other days where the bulls weren't there, they are here now. And we can see, eventually if they are able to overwhelm the bulls, and that's when you get your reversal patterns. You can see your rune indicator here. The range is still really, really low. So we're still set up for a breakout move, as you saw with the Bollinger Bandwidth as well. Today's volume and range was right about the average for both. The range was just over the average, and the volume was a little bit over the average as well at 84 million. So when you put those numbers in context, 7 points is right here above the average. The volume was 80 some odd million. Again, above the numbers that are above the averages that pull them up, are bearish, not bullish. So we'll keep that in mind. And then finally, your VIX. Your VIX, again, is this very seasonally bullish time of year. Your VIX started higher and dropped down below 20 again, down all the way to 19. The VVIX, you can see, dropped and finished at 80, relatively low level, though it was actually up on the day. And remember too, the seasonality here for the VIX relative to SPX. You can see the correlation is turning back, the negative correlation is turning back up as the VIX is dropping and the S&P is rising. You got a negative correlation, but it's not as negative. And again, look, this is the trend you have going into basically March expiration, to a pretty significant, that's over 5 years. But if we smooth that out to over 20, you can still see, you're looking at a 20% gain on average for the VIX by the time we get to March expiration, and we're down 16% year to date. So we're well off the seasonal trend, and that seasonal trend is expected to continue to move to the upside, as well as all the other factors. Remember, the other thing too, the compression for the VIX has been very significant. We're below this 10% mark and have been for quite a while here. So the longer it compresses, the more likely it is to really break out and bust. In this case, you would expect it would be a big bust breakout move to the upside, as our downside is limited by how low that VVIX already is and how low the VIX ratio already is. All right, now let's take a look at what's moving this market here today. It's a very interesting pattern here when you look at it on this chart. Obviously, international equities, basically a weak dollar is really pushing. Long-term bonds are up. Which means bond yields are down. Remember that for most of last year, the strong dollar and yields both went up. So that they're both dropping here. Commodities, though, are not getting a lift out of it, but international equities are, emerging markets especially. Gold is really taking off, and like I said, even long-term bonds. But looking at just today, 125 will come out here. There we go. We started down. Bonds were up. Global bonds were up. Those are the only two things that are up. The dollar was down. The dollar finished the day down. But off of these lows, equities really took off. The Qs finished down. The S&P was flat. IWM had a pretty decent gain, outpacing long-term bonds. Long-term bonds started the day up. They fell, which means yields rallied. But then yields fell throughout the day, and really emerging markets was the only significant mover, and that really wasn't even that significant of a move. Everything else was either 1/3% for a loss or 2/3% for a gain. So ultimately finished with a very flat session, even though at one point in time, the Qs were down 2.5% coming off of Microsoft's earnings there. Let's take a look at how long-term bonds are doing here on their chart. Again, they're converging right in between these moving averages with that 200-day moving average. You can see the dollar broke its 200-day moving average, fell down today, and appears to be trying to make its way below the value area of on the 1-year chart, but pretty significant move there. When you look at, again, the two biggest components that make up 70% of the dollar index are the Euro US dollar, which has been grinding higher towards these Fibonacci resistance areas. The US dollar yen is really down significantly, like again from 152 down to 129. That's a significant move. Sorry about that. Thought I hit that mute button. That's a significant move there. But again, you can see we've had our biggest momentum. We've been basically converging here. So at some point in time, the dollar is going to, it's going to at least retrace back up to the upside, as we're done with the biggest bulk of the momentum move. The other thing that's really benefited from the weakness in the dollar here has been Bitcoin. Bitcoin rallied up to its 200-day moving average. Again, its histogram's already peaked. The MACD itself is peaking, and at worst, we're at least starting a convergence period where the MACD moves below its moving average, and we are still above the 17-day. But we'll see how much that holds, because again, you have the 200-week and the 50-week moving averages sitting here as a resistance level. Once you get into bearish territory below this long-term moving average, obviously you get your return move back up, and then the actual bear market starts after that. So that's something to keep in mind with Bitcoin. This might be one of those false moves to the upside that sucker a lot of people into thinking that we're not going to go in a bear market before it works its way and spends most of the period here below the 200-week moving average. Let's take a look here at the sectors and how they performed here today. So again, big one-day reversal here. We'll go to the 25th. Let's change it to like a 3-minute chart. And you can see financials did really, really well today. Utilities were down. They started, obviously technology was down to Microsoft. Technology ended up being only down 0.25%. But what's interesting is utility started the day down too. And then they finished the day down quite a bit there. So when you look at, and you can see financials on the other end, this is interesting because this would be a rising yield situation when financials benefit and utilities drop. But we didn't quite get a significant rising yield today. When you look at the sector 12 grid, I look at them all together here. Again, you can see, how we're getting dark green shading and green line across the board, except for utilities, staples, healthcare, the safe haven areas. So we're definitely shifting towards technology. We're shifting towards discretionary. Communication services at 3-month highs. That's really the only thing, right? The others are kind of flat to actually just sideways here, trying to get a new thing going. When you look at the major markets, it's kind of interesting to see this, to see how China and Korea are doing here, again, relative to the U.S. and other markets. Really taken off. Strong bullish trend. I mean, this is not how the U.S. market looks like. The Korea, look at all the developed markets. Germany, Japan, UK, France, Italy over here. These are strong moves. Even Brazil is starting to reverse and work its way to the upside. Canada just showed an overbought cluster, which again, the market's not anywhere near an overbought cluster. So really strong moves all across the board globally, and it's actually the U.S. markets that are lagging right now. And that's been something we've been talking about quite a bit in our Market Scholars classes, and we've actually allocated our portfolio with the expectation of outperformance from international equities. And you're really starting to see it in our class portfolio as an example of what you can do, and you can see how that's playing out here with US flat and everything else trending really, really nicely. All right, now let's take a look at our trade idea of the day. And as we do that, let me come over here first to the Market Watch tab, and we can take a look and see what really did, how things performed here today. Obviously, Google's has its own issues right now. But Microsoft had its earnings out. It was down 0.5%, was down way more than that. It was actually up 4% in the after hours initially before coming back down. You can see that Apple is kind of in that same mode. Semiconductors did not do very well. Intel is coming out with their earnings here this week as well. You see some industrials names, material names not doing very well either. FCX really the only one that's kind of broken out to the upside. Banks are lagging behind and not doing much. The same thing with these retailers like Walmart and Costco, pretty flat. We have an old iron condor trade on Costco that we did in the old Market Outlook video. That's great, right? As long as it stays flat like that, that's exactly what we want to see. Some outperformance in some healthcare names, but not necessarily the technology type names. You can see Medtronic here. Abbott Labs not doing as well. I want to take a look at Medtronic, so let's pull that chart up from Medtronic. All right, you can see it's got, it's been strongly bearish for a good chunk of time, going from 115 all the way down to 75. But we got dark green shading and green line. We're kind of trending, grinding to the upside. Not the greatest short-term sentiment, but at least you're getting higher highs. And you're not getting bearish lows. At least you're continuing to get bullish lows. When you look at its weekly chart, we have been, we do have the green line. We have the rising. We have a positive, bullish candle, and we have a rising PPO. I mean, those are all really positive developments here. It kind of at least suggests that we are done with the declines in Medtronic. We might not be strongly bullish, but we're also not very strongly bearish anymore either. As you can see, the point of control is pretty much at the 52-week lows. So very strong support at these lows, even if we don't have a whole lot of upside because of, again, 200 days right up there. You got some volume nodes up there as well. And this whole area is a big volume node. So it's going to be, it takes a lot to work your way through that area there. But at least, you are getting, we don't have, the bearish trend anymore. The bearish trend is done. What bearish trend we have? We have a positive 26-day rate of change with that red line where it's at. You look at the DMI for Medtronics. You can see we have a positive crossover, and the negative indicator is at a relatively low level. Even if the positive indicator is not quite above 30 or even above 25, it's down just a smidgen there below 25. And then finally looking at the Bollinger Bands and the Keltner channels, you can see we're right near that. Or excuse me, here, let's go Medtronics. We are right here in the middle of a relatively low bandwidth. The bands are still inside the Keltner channels. We got some positive momentum. You can also see too, we are in the upper half of the chart and have been for most of this time. So, we're not strongly bullish, but we're also bullish enough to not be bearish anymore. And that sets me up for doing an iron condor spread. So selling the low 20s on the delta, buying $2.50 away, selling again low 20s on the delta, buying $2.50 away. That sets you up for this trade. If you look at these break evens, they're sitting right there. So the lower break even is at basically that point of control, and the higher break even you can see is up near towards this volume node area, this old high point. So we'd have to really take off from here to break out of this volume node mess that we've been in for a couple expiration cycles now. We'd have to really break out of that for us to, again, take what we would hope to be up to at least a $294 loss for the $700 of risk that we're willing to take in this position. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping on the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread with any questions or comments you have. Apply to anybody else's thread. And let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Subscribe to our website as well, marketscholars.com, for free. Follow us and like us on Twitter and Facebook. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.